Hey, what's up, guys? Welcome back to another episode of the Daily Crypto News. It is Friday, guys. We finally made it to the weekend. Uh, as you guys know, I'm vibing, and I have my brother with me, Mr. Scott Tripp, aka the Crypto Beast. We're both admins over here at BigONE, as well as Scott handles all the social media. And we like to take a couple minutes out of our day, kind of jump into some crypto headlines, see what you guys think about them, and then get on and see if we can share some similarities in the topics that we're looking at throughout the day. Before we jump into things today, guys, just like we do every day, we like to jump over to the Crypto Beast, get the daily market sentiment, and he gets this sentiment based off different things that he sees throughout the day, but whether it be on social media or some other form of a platform, whether it's news or anything like that. So without further ado, Crypto Beast, take it over.
Well, I guess I gotta say I'm not surprised that it went down again. Like it's not. I'm expecting further going down. Like you just need to open the news for 1 minute to realize that things aren't going the way that everyone wants it to go. From protests in Canada to Russia stirring the pot, but I think it's more the U.S. potentially stirring the pot as well. I don't really know what to really blame on that. It doesn't matter either way. They're both no better than one another. So I just think it is creating a lot of FUD in the market right now, with the stock market going down as well, suffering from the same kind of disinformation. And I feel bad. Like it's driving the market in a totally wrong direction.
So you say the sentiment today, we switched from neutral to now probably a little bit of a bearish sentiment as we see some of the other markets around the world crash. Um, you know, but never know. Sometimes the thing about crypto is it always has these nice little bumps on the weekend. So I guess we'll sit back and watch and see what the weekend holds. But nonetheless, yeah, I think the sentiment is definitely seeing a lot of red. I mean, it was just Valentine's Day and everybody's getting their roses. So without further ado, we'll jump right into the daily crypto news today. Our first article is going to be coming from Cointelegraph. The headline reads, NFTs and DeFi are revolutionizing real estate investing and home ownership. Here's how. NFTs continue to make an impact on multiple sectors, and this is mainstreaming. This mainstreaming has opened up new opportunities and revealing new trends for blockchain technologies. Recently, the real estate sector has shown interest in blockchain technology because it opens up the potential for fractionalized ownership, cryptocurrency-backed mortgages, and other unique ownerships, financing, and payment models. Here's a look at a few real estate oriented blockchain projects that are to integrate decentralized finance, crypto payments, and NFTs. Proppy is one of them, Milo and Vesta. So these are some of the projects that are built in the cryptocurrency sector that's going to be using the blockchain for purchasing houses, and people will be able to also purchase homes or purchase NFTs and have it actually tie into actual land sales. And you're going to see this pop up. I think when we talked about being able to show certificates of ownership online with NFTs. I mean, it's going to be the same thing when you think about titles and deeds to land and things of that nature. So I just think this is the next step in the evolution, and we keep seeing week by week, we're starting to see different type of business models get involved with cryptocurrency and using the blockchain. And here we are looking at real estate. It's no different.
Mm-hmm. The one thing I've kind of heard about real estate, which kind of scares me, is it is an asset versus what cryptocurrency is. And there's a lot heavier regulation behind assets. So it's just something to be aware of, I guess.
I think in that sense, Scott, when you think about it, like when you do purchase these NFTs that's tied to actual real land, they're going to be considered securities, right? But who's to say that the NFT that you buy wouldn't also generate the same amount of profitability as a home going forward in the future? So I don't know. I think it's definitely going to be interesting. But yeah, we should all be cognizant, and we got to all really start digging in and starting to understand the difference between some tokens and some things that are going to be considered assets and securities in the future.
Yeah, definitely. And here is my first article, kind of continuation of the Freedom Convoy here in Canada, since it's close to heart for me, just because I experience it every day on the news and I did through friends on Facebook and all sorts of stuff. So yesterday, a group of Ottawa residents won a private class action lawsuit to freeze at least 146 cryptocurrency wallets and bank assets tied to the main organizers of Canadian Freedom Convoy in a bid to staunch funding for the ongoing demonstrations. Known as a Marev injunction, the lawsuit was filed by Ottawa residents, convoy organizers, including Chris Barber, Benjamin Ditcher, Tamara Litch, and Nicholas St. Louis. The hearing was held in private without public notice or access. Paul Champ, who represented the residents bringing the suit, told the Star, a Toronto headquartered Canadian newspaper, Lee earlier this month won an injunction which barred protesters from honking their horns in downtown Ottawa. So this Lee, actually, it's kind of funny. I've heard a little bit about her. She's actually pretty young. I think she's in her 20s, and being a real staunch advocate against the freedom convoys at the moment, causing some of these lawsuits and stuff. The one, I guess, question that I have is there's lawsuits coming in on the other side over the Emergency Act that Trudeau did. But I guess, how do you lock down a courtroom and not allow anyone into the courtroom, even to potentially defend themselves? That's my one question I have about it. So you lock it down, don't let anybody in, and this is the decision we're going to come to. There's something that speaks volumes about what could be wrong with that.
Yeah, man, this freedom convoy, it woke a lot of people up, I think, in terms of what governments have the power to do, and how we give them the power to do it. And
sorry, Kraken, I don't know if you've seen it. The CEO of Kraken came out and told the Freedom Convoy, who he's a staunch supporter of, to get their money off of Kraken, that he can no longer protect them, and to try and go peer to peer. So yeah, I mean, that's the only way they're going to stop it.
Yeah, I think when you think about it, Scott, governments are going to really try to go after the exchanges, because the exchanges are essentially what banks are for us today. So if we're going to do peer to peer, we'll have a lot better chances from what they're saying in this article. And I think that's what the Freedom Convoy was all about, is the freedom of the people and the freedom of movement. So I think that this one's like, we're going to hear a little bit more about this. I don't think, like I always say this, man, this won't be the last one. This won't be the last article on that. So we'll definitely keep paying attention, and I'm pretty sure there'll definitely be some more news. And I hope everything stays well over there for you, Scott, over there in the Canadian side. All right, so go to my next article. We're going to stay right here on Cointelegraph. The headline reads: Georgia lawmakers consider giving crypto miners tax exemptions in a new bill. So 5 members of the Georgia House of Representatives have introduced a bill that would exempt local crypto miners from paying sales or end-use tax. So on Monday, Don Parsons, Todd Jones, Kate Dempsey, Heath Clark, and Casey Carpenter introduced HB 1342, a bill that has yet to be titled. The legislation proposes to amend the state tax code to exempt the sale or use of electricity used in commercial mining of digital assets, and would likely only apply to commercial miners operating in a facility at least 75,000 square feet, roughly 6,968 square meters. The proposed bill is the latest in a series of state-level measures aiming to encourage crypto miners to set up shop. In January, Illinois lawmakers introduced a bill that would extend tax incentives for data centers engaged in crypto mining. Kentucky proposed similar legislation in March 2021. So this is going to be some great news, Scott. I think when you think about it, you start seeing these different states implementing tax laws that's going to let these people start mining crypto. It's almost like they're welcoming in people, doing crypto or mining for crypto. But when I read this and I look a little bit more into it, they're talking about the commercialized side of it. They're not talking about the residential side of it. So this may be one of those news articles that you look at and you read in between the lines and think, hey, maybe the governments are going to start participating in doing Bitcoin mining. And guys, we should already be a step ahead and already be doing it. And it wouldn't be. And if you have friends that are also doing Bitcoin mining or not necessarily Bitcoin mining, but are also doing mining, maybe you guys can start a little farm. and then you could reap some of the benefits as well. So be smart business people. We're out there and reading some of these laws and legislations that's being passed or looking to be passed.
No, that totally makes sense. This is kind of funny. On the other side of things, they're passing some laws on to federal officials, which I think is hugely important. In all honesty, I think it's something both me and Viben have talked about in the past. I know for sure I have, but Fed senior officials will soon not be allowed to trade cryptos, stocks, and bonds. The Federal Open Market Committee, or FOMC, has approved rules that would ban senior officials at the Federal Reserve from purchasing and holding cryptocurrencies and other investments. In Friday's announcement, the FOMC said that starting on May 1st, senior Federal Reserve officials already working at the agency would have 1 year to dispose of all imperishable holdings, while new officials would have 6 months to do so. The new rules specify that Fed senior officials, which include Reserve First Bank vice presidents and research directors, FOMC staff officers, the system open market account manager and deputy manager, board division directors who regularly attend committee meetings, individuals designated by the Fed chair, and their spouses and children under 18. My only question is, when is the federal government going to stop their own officials, not just Treasury officials, to stop buying stocks and cryptocurrency that is so easily manipulated by federal decisions or government decisions when it comes to laws and things to be put in place? You see some of these bigger people actually buying stock in companies that they know some of these laws are going to change the way that the companies are working and beneficial to them for buying stocks. So in the end, it's total market manipulation and something that potentially shouldn't be in place. There should be some kind of regulation, or even more than just a report saying what stocks you bought, right?
Yeah, man. And my question with that is why now? Why? And look at the time period of duration they give them to get out, right? Like they get up to 6 months to get out. Like, hey, don't sell it today because this might be the bottom, right? Yeah. So it's another one of those things where I try to read between the lines, Scott, and try to see what they're talking about. But yeah, man, it's definitely one of those times to pay attention to the news, try to read in between the lines, and see what the government is doing. I mean, I think of them saying this right now, Scott, it raises a red flag for me. And it's like, hey, do they say, hey, look, we don't want you guys trading anything that we think might collapse here soon? Because that's pretty much what it sounds like they're saying there. But nonetheless, I think this should have been something that happened a long time ago. I don't think they should have ever been able to trade any stocks or anything like that, especially when they're the ones that's setting the precedents on the regulations and things of that nature. But without further ado, I'm going to go to my last article today. Won't keep you guys super long today on a Friday, but it reads, executive at Composable Finance allegedly doxxed as convicted fraudster Omar Zaki. I bring this article up mainly because this was one of the, if you know about Composable Finance, Scott, they actually won the crowd loan for Polkadot in February, or was it November? Somewhere between November and February. They won the crowd loan. So you had a lot of people participating. I think it was over 9,000 people who participated on the Composable dot crowd loan. So that was immediately, as soon as I seen this article, I was like, well, let me click on here and we'll find out a little bit more about it. So late Friday afternoon, DeFi investigator, I won't say his name, published a series of tweets accusing fraudster Omar Zaki of hiding behind the facade OX Brainjar, the anonymous head of the head of product Composable Finance. So from last November to this February, Composable Finance raised over $167 million, as well as crowd loan auctions on the Polkadot and Kusama parachains. Over 9,000 participants contributed to the dot crowd loan alone. So as by the report, the documents from the U.S. Exchange or the SEC, Omar Zaki, then a 21-year-old New York resident and a graduate of Yale University with a bachelor's degree in Physics and Economics was charged with fraud after misleading investors operating in an unregistered hedge fund resulted in a civil penalty of $25,000. In addition, two crypto projects allegedly run by Zaki Warp Finance and ForceDAO allegedly suffered hacks, resulting in $8.36 million in the lost funds, some of which were partially recovered. So it looks like on this one right here, it looks like somebody's starting to really track these people down, Scott. And what's funny about this, Scott, is the source that they're pointing out for this is actually the source that I told you about that I had actually found and started chatting with. And this guy really does his homework. He's able to, find different NFTs that these people purchase and post them online, and he goes back and tracks the wallets. So I want to I want to see how this one turns out. I've heard a lot of different Omars in the industry that's been known for kind of being shady, and I don't know if it's the same one and it's changing his name a little bit, but we're gonna see. But they said here in the blockchain community for his sleuthing skills and unmasking the history behind anonymous devs of DeFi project. Last month, the DeFi sleuth uncovered that the co-founder of D-Fund Exchange, Quadriga CX, Michael Patron, held the position of the financial chief at Wonderland. Just a few days later, the Avalanche-based revenue currency shut down after being negatively surrounded by the unmasking of a sharp divide in the community. So not only when they found out about Michael Patron, Scott, they found out he was also linked to some of the other products that were being put out on Avalanche to cause dismantle over there as well. So it's like these devs are literally just sniping different projects that start up and on different blockchains and just running the same act, the same show over and over again.
And that's crazy. Like, I get it. Like, it's horrible. Until we get this cleared out, it needs to be cleared out. There's no question. Somebody like this,
167 million collected in crowd loans, bro. That's before anything comes out, guys. You understand? Like that's scary. So make sure we try to take our time and do our due diligence and find out who are behind these projects. Scott talks about it a lot. Like, who's the dev? Who is he? And can we find them easily, or is it just going to be a picture of an avatar?
Yeah, exactly. And here I'm going to show you this next one here about Algorand. This is an interesting article too. Algorand is putting $20 million in funding to accelerate development in its ecosystem, according to a Thursday evening announcement by Algorand Foundation CEO Stacy Warden at the ETH Denver conference. Foundation officials said $10 million in grants would go to developers that can provide solutions for Ethereum virtual machine compatibility, a key cog for emerging networks looking to woo established projects. For Algorand, EVM compatibility means applications that are built on Ethereum or other Ethereum compatible chains can also be executed on Algorand. The announcement comes as token-rich blockchain projects increasingly turn to funding incentives to lure developers' talents into building out their ecosystems. It's great. And I love that. I love that they're working with Ethereum. I think that's an important chain to go cross-chain in. I'm just waiting, like I think Vivint is, for some BNB style bridges. So
yeah, for sure, Scott. I think hold up, I feel like my video was frozen. I think, when you think about Algorand, we keep hearing news about them, just like we hear about Matic and tapping into that EVM and getting that thing to turn a little bit, doing some things over there. I'd love to see what they're building. I think, we keep talking about, in the bull run is the time to market. This is the time to build. The builder is going to build regardless of the market conditions. They're not looking at prices. They're just out to do what they're going to do, and they're getting a paycheck to do it. So I think, it's interesting to see, and we'll see what they continue to build throughout these next couple of months. To jump into the last segment of the day, guys, we're going to jump over to tradingview.com, kind of see what's going on in the total crypto market cap, as well as a couple of the dominance factors that we like to pay attention to. Right now, the total crypto market cap is at 1.78 trillion. So that's a little bit down from yesterday when we were at 1.81 or 1.85. Bitcoin dominance is at 42.58, still in that area where we showed yesterday on the screen. I showed you guys how it's starting to form a support starting to build a little floor in that 42% range, and the Ethereum dominance is 18.69. So here we are. I don't think the market conditions really favor any real movement right now. We're not getting anything. We're getting a lot of consolidations out of the dominance. When you get consolidation in the dominance factors, guys, we're going to have to find support. Wherever Bitcoin finds its support, it's going to look for support before it gains up to the next level, as well as Ethereum. So I think this weekend, it's a good time to just sit back, relax, let the markets do what it's going to do. There's a lot of fear and uncertainty in the market, dealing with a lot of different marketing conditions from different financial sectors all around the world, and we got maybe a potential World War III forming. So it's a lot of uncertainty, guys. It's a good time just to really pop some popcorn, sit back, have a good weekend with the family and friends, and not worry about the crypto for the weekend. I think we'll be all right, and then Monday we can reassess, and then we'll start a new week. But as always, guys, we appreciate you stopping by today, checking out the daily crypto news. Not sure if you guys had a chance to jump into our Twitter space today. We did a bunch of announcements and ended up not getting through all of them, but it's okay. We had a really entertaining community pop in, talk about their project, and we hope to bring you guys more good news next week, and hope you guys stay engaged. So that's all I have for today. Scott, you have anything before we head out?
No, just enjoy your weekend. Don't stress yourself out. Don't be too heavily into the negative. Right now, we got to try and ride that line as best we can. So I'm always here for you. Always remember that. If you ever have a question or concern, you can always reach out to me or Vibe, and we'd be happy to answer anything you might have.
Yeah, due to COVID restrictions, guys, we're going to have to keep all the hugs virtual. So if you need a hug, guys, we're going to be giving those out virtually.
Yeah. I'm not a big hug person either. It'll be all virtual.
All right, guys, we appreciate it. Until Monday, I guess that's it for us today, and we'll see you guys next week.
Peace. See you guys later.